Symmetrical triangles represent a period of consolidation where price action coils into an increasingly tighter range. The defining characteristic is two converging trend lines, one connecting lower highs and the other connecting higher lows, creating a shape that narrows toward a point known as the apex. This formation signals that neither buyers nor sellers have seized control, leading to a buildup of energy that must eventually release. The key to trading this pattern lies in waiting for the breakout to occur. Do not anticipate the direction. A symmetrical triangle is neutral by nature, meaning the price can break either up or down with equal probability. Premature entries often lead to losses, as false moves and fakeouts are common before the true direction is established. Volume provides the crucial confirmation you need. During the formation of the triangle, volume should consistently decline as the price oscillates back and forth. This declining volume reflects indecision and the shrinking range. When the breakout finally happens, look for a sudden and noticeable spike in volume. That surge of participation validates that the breakout is genuine and has real conviction behind it. The most reliable entry point is when the price closes decisively outside the trend line with that increased volume. A common practice is to enter a long position if the price breaks above the upper trend line with strong volume, or enter a short position if it breaks below the lower trend line with similar force. Patience here is your greatest asset. Force nothing. For your stop loss, place it just inside the triangle, on the opposite side of the breakout. If you go long, your stop goes below the most recent swing low within the triangle. If you go short, your stop goes above the most recent swing high. This positioning keeps your risk defined and protects you if the breakout fails and price reverses back into the pattern. Calculating your price target is straightforward. Measure the height of the triangle at its widest point, which is usually the very first swing high and swing low where the pattern began. Then project that same vertical distance from the breakout point. If you break out to the upside, add that height to the breakout price. For a downside breakout, subtract it. Time decay is a factor you must respect. The closer price gets to the apex, the weaker the potential breakout becomes. Ideally, you want the breakout to occur between 1/2 and 3/4 of the way through the triangle's formation. If price crawls all the way to the apex without a clear move, the pattern loses its energy and often leads to a weak or failed breakout. Finally, remember that symmetrical triangles can act as continuation patterns within a larger trend, but they can also signal reversals. Always evaluate the broader context of the market structure and higher timeframes. Combine this setup with other forms of analysis, such as support and resistance levels or indicator divergence, to increase your probability of success.